Okay, so this is going to be a review of the GCAD trade that I took. So this is the outcome of the trade. It was going in profit, but now let's assess why it failed. All right, so remembering that ultimately this trade was based off of the macro structural points here, saw that we were, trending higher, low, high, low, high. Then we had a pullback, mitigation of this price gap here, and then that led to a push higher, high, liquidity grab, and then in that liquidity draw here, that's where I ended up finding my entry on the 1 minute time frame, which was based off of this price action here, where we initially had the mitigation or the action of reversal here, which was the liquidity draw. We had a break of structure of that 1 minute microstructural point here, and then that generated this price gap, which was the origin of the move after mitigation there, and then price mitigated 50% of this price gap. But I explained that I was driving, so I market executed just a little bit higher. It mitigated 50%, and so I entered in about 1.8382, which is about six or so pips higher, 6-7 pips higher than what I was wanting to enter in, but that's fine. Still got into the trade, and then it gave a really good response. I think it was up over, let's see here. From entry, yeah, about 113 pips. I was expecting more, obviously, but if I were to have, stopped the trade, I would have stopped the trade here at this high, which would have been essentially that there, which would have been 50 pips, which would have been a 5-6 to 1, which is still a very, very good trade. But ultimately, I was looking for a swing on this towards continuation, at least till this high here. But ultimately, Price decided to forego doing that and stop me out here. So now I want to see, why did Price do that? So if we look to the daily, there's a couple things that I can assess. The first is reanalyzing the structure here. So I see that I have a low. We took out the previous high. This is the low, the structural point. Then we have a liquidity point, structural point. Why is this a structural point? Because this right here caused liquidity grab here, and this is the last low that this is the lowest low before taking out this high. So that's my next structural point, and then we have a liquidity point. All right, after that liquidity point, we then pulled back, broke internal liquidity that solidified this price leg from this low to this high here. And then once that price leg was solidified, this then came down to mitigate any inefficient pricing, which I identified as that price gap. And then once that price gap was mitigated, that's when I saw the play here. So now the only thing that I can think of is either this price action is setting up for us to transition from a bullish run, continuation of this bullish run, into potentially a bullish range. And so what does that mean? That means that either this price action was just another liquidity draw of that low here, or it's going to target this low, or we're aiming for the structural point in which we are going to get a major response from this point. So price action would lead to the structural point, and then we need to assess the action that occurs here, either a break of structure or a liquidity draw. Now, extrapolating, if this is a liquidity draw, then all that's going to do is shift our structural point from here to wherever that liquidity draw occurs. If this is a break of structure, then this is a full-on break of structure of this bullish run, and we will now have transitioned into a bullish range, in which we would need to look for potential opportunities in the discount side of the range and the premium side of the range. So that's pretty much what happened on the GCAD trade. That's the justification for it. Once again, I would take this trade 10 out of 10 times. It fit the model, everything. It was inside of the discount side of this price leg. We're inside of a bullish run, where the market state is a bullish run. So everything lined up. I identified the liquidity draw. Everything seemed, ideal for the most part. The only other thing that I can think of that possibly, you know, could have happened is I was early or did not analyze the chart as far as the reaction or the response here after the mitigation of this price gap, which is identified by this Fibonacci. I didn't analyze this well enough. As in, I just saw this liquidity draw, but I didn't analyze, the candles here, and see that, hey, as I'm doing this live here, we got the mitigation. This ran this previous high uninterrupted here. Okay. Oop. All right, so we got that high ran there. And so get rid of this, get rid of this. This is now a live reanalysis of this market here. All right, so now that we have that, after mitigation, we ran this high. So if this is uninterrupted price action, then I should be looking inside of this candle, because this not only is that, this is a sponsor candle. I should have been looking inside of this candle for potential plays, right? So that would be this here. And as we drag that out, we can see that this area of interest, which is the sponsor candle, we mitigated 50%. But ultimately, this is a very large, candle, very large stop. So can I refine this to see if there was any opportunity in which price was looking to mitigate something? So I'm not too much worried about the price action up here and mitigating this high. I'm more so worried about looking for opportunities inside of this area, to see where the origin of the move was. And so I start descending down the time frames, 20 minute, 15 minute, and let me do the replay so it makes it a lot easier to look at. Right, so this is what I do. This is me doing live analysis. And so now I'm looking inside of this green box. We see already mitigated the green. We already saw that it mitigated the green, so 50% is where we're looking at. And we want to see inside of this area if there's any price gap or sponsor candle that arises for an entry. So go down to the 10 minute, 5 minute, and I'm just doing a quick overview, just, processing the charts in quick time real quick to see if I see anything. 3 minute, 2 minute, 1 minute. All right. And as I go back up, these charts here, something that stood out to me immediately was the 3 minute time frame and this price action right here, where we had this low, this high, or something right here, high, low, high, unwillingness led to a break, not only of that high, but this high here. And ultimately, what I want to look at now is the order flow and the price action here. Everything from this low up to this price gap here is completely balanced, which means to tell me that there's inefficiency beginning right here in this price gap here. That is the inefficiency that I would look for. That's the inefficiency that I probably should have been looking for all along. And this would be the entry. I'll probably have to redo that. This would be the entry in which I would play. And so my stop loss would be below here. And so I want to see if this was the entry that price decided to actually give, or did it mitigate something lower? We'll see here. But this is what I think happened. All right, so it did end up actually mitigating that low. It did go below there. So let me reassess to see if there was anything that I missed. So I'm going to go back here, go down to the 2 minute, 1 minute. All right, nothing too much. Possibly the 45 second, 30 second. Okay, 15. Interesting. So now we're getting like super precise here. And let's see, not really seeing anything. I don't want to force anything. Don't want to overanalyze. So yeah, I mean, at this point, what I would do is I would just go back out, start over, right? Go up to the 30-minute, the 15-minute, whatever. Let's see, 1 hour, 30-minute, 20-minute. All right. And ultimately, it seems that price is mitigating 300 20-minute price gap. Okay, looks like it's mitigated close to 100% of it, whatever. And this might be the potential play. But ultimately, all that to say, if price were to have mitigated that 50%, I wouldn't even, that would be looking for the refinement entry. Now what I could do is I can wait for price to give the response here and catch the reaction or the response entry here based off the price action that occurs here. So this right here was just trying to find, hey, where was the specific candle that price was looking to mitigate if it was pulling back into this, sponsor candle, this 1 hour area of interest. But now what I would like to see, I don't know why price is moving. What I would like to see is if there's any other opportunities here moving forward. And I'm not going to talk about that here now. But all right, yeah. Hope that was, it was a little sporadic of a video, but I hope that gives a little bit more insight in how I, find these areas of interest, do the analysis. All right. If you have any questions, please ask. Peace.